What's going on, everybody? It's your boy C-Zar, and we are talking about Dash today. It is the 26th day of November. And here we are sitting at about $63.78 with 6 hours and 51 minutes left in this day. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it, okay? Now, I do want to maintain the stance that we still have lower to go. I do believe that. And down here, whenever we accepted that, we still did say that we could see a lower high and that we would not be convinced that we're done moving lower until we get above about, basically like $100 till we get back above there. Maybe there's some hope once we get back above $80 that this could be the low and that we do move up higher. But any kind of price action in between is not something to get excited about. So no, we're not wrong here, right? In fact, expecting some volatility is exactly what we kind of intended, was that we might see a lower high before going lower. It's pretty common, right? If we're looking at this overall, we were thinking and still are kind of thinking that this is an ABC correction, in which case ABC corrections typically end here where the length of this leg was, or maybe even a little bit lower, and that should take us below below $45, around $40, something around there. We're still holding out for that. With that being said, not financial advice, not a financial advisor, it is completely possible that this was our ABC correction. Now, statistically speaking, it's a lot less likely, it's a lot more improbable that this leg here would be shorter than this leg, but anything can happen. We should keep our minds open to it. And I definitely am open to the idea that Dash could have pulled back, that might be it, and now we're ready to rip. It might be that simple, but I won't be convinced, unfortunately, that we're ready to rip until, let's see, I mean, really until we start closing days above $100 again. I will be somewhat optimistic if we're back above 90, somewhat optimistic, but for complete conviction, we'll have to wait till we're above 100, because we genuinely might see a move that takes us above this trend line here. And then from that point, as soon as you get above this trend line, that could be the rejection point. You get above $80 and then boom, right there, that's when you find resistance and you come down. What a perfect lower high to have. Everybody gets excited, you're breaking this trend line, you're going to move higher, right? Probably exactly like what happened here. Let's look at the 4-hour time frame, right? Again, with the premise that this trend line connecting the dots here between these two high points here, if we got above that, people might get bullish, buy the top, and then we drop, right? Because typically at the top that you have the most buyers, not the bottom. Here you have the most sellers. Here you have the most buyers. Typically that's what marks the top and marks the bottom. You would think there's more buyers at a bottom. That's why it's the low. Or more sellers at the top. That's why it's the high. But really the most amount of buyers in numbers are at the highs. The most amount of sellers in numbers are at the lows. Looking at the 4-hour time frame, again, this idea that if we go above this trend line, that might be exactly where we find resistance. If we're looking at the 4-hour, imagine if we took this trend line here and connected the dots, right? You're connecting the dots between these highs here, right? As soon as we got above here, was this the best time to buy? I mean, sure, if you bought back here, you got the little bump and run. Sure, you might have made a little bit of cash. If you're expecting higher prices, you probably still held on. Really, this was not a good time to buy. Really, if you bought there, that was a bit of a trap from the lows, and you went lower. So again, just offering that same thought on the daily time frame, could we not do the same thing? And this is where, again, if we see prices above $80, even then I wouldn't be excited. It's kind of a fickle thing. And you might be watching this thinking, I don't like TA anymore. I have to wait. We're at $64. I have to wait for $100 to break before I can get bullish. That's a 52% pump. I'm just taking a shot in the dark until then. I don't like this. It doesn't feel, I wish I knew sooner. Me too. But that's what it takes. TA can mess with you. Or the charts can mess with you, and the TA is what it is to actually protect you from being messed with, I should say, right? Because we could break this trend line, but the TA says no, we could go lower still. That just because we break that trend line doesn't mean anything. From a high to a low, that right there is our 382. It's absurdly common. Take the trend line out of context. It's absurdly common to retrace to your 382 and progress lower. It's extremely common to do that. Okay, let's look at the 1-hour time frame. We'll zoom out from there. Again, I'm making this premise, starting off the video this way, because if we do continue to move up, that's what it's going to take. And on the bright side, my friends, not financial advice, not a financial advisor. If you've been following the Dash Chronicles, we advocated for the buy here. We advocated for not buying here once it came down, right? If I was trading Dash, I would have bought here. I wouldn't have sold here. I probably would have either sold here or not sold, and then we start to buy, we start to DCA down as it goes, right? Advocating for the buy anywhere from $51 and lower. That's kind of the thought at this moment. So would I have bought here? No, probably not. I probably would have waited for $51 or lower. And the reason why I would wait for $51 or lower, not financial advice, not a financial advisor, is because here we've broken through the 382. Statistically speaking, we are most likely to at least interact with this level, if not the golden ratio zone itself, before seeing any kind of true recovery. And maybe this is all we get. Maybe we're just back testing the 382 to find resistance. Again, the thought of going to $80, we talked about that, or even above there, just as a lower high kind of thought, but that doesn't need to happen. Just because it could make sense to go up here and then come down doesn't mean it has to happen. Who cares? It does not need to happen at all. It doesn't have to fit your cookie cutter world, right? This here, we have this ascending trend line, and then every point below, this is the best time to buy. It doesn't have to fit your cookie cutter world. It can just do whatever it wants. It doesn't have to look pretty. But if it wants to look pretty, maybe we do run up to $80. All I'm trying to say is, statistically speaking, the way that this fib is portrayed, 382 bounce, 236 rejection down here, it's improbable that we move up to new highs at all, get above this high point at all, before interacting with the green line or the white lines. And the green line here is at $51. The bottom white line is at $34. Okay, so that's my thought. That's where I'm at right now. You might be looking at this and thinking, oh, we're finding support at prior resistance. I'd raise that and say we might not be finding support at prior resistance, or maybe we even did find support here at prior resistance, but now we're finding resistance at prior support. We're finding resistance at prior resistance, right? That's what it seems like to me. Let's look at the short-term stuff. We'll look at the indicators and see what they're explaining. Are we going to go higher from here? Do we reject from here and go lower? I'm still in the position of not financial advice, not a financial advisor, thinking that that dash is not at a good price to buy. And again, on the bright side, this is actually a thought that I keep getting distracted from. Let me do this before we get into the short-term stuff. Let's imagine that I'm wrong. Let's imagine that the price doesn't go lower. Let's imagine that this is the low. And with my style, and I think how it should be done, we wait until $100 to get bullish. Well, at $100 on a daily close right at that moment, we will be bullish, undoubtedly bullish. It's time to buy and get excited. I'd more confidently buy there than I would here, and we would still have anywhere from about a 90% to a 177% move to the upside. If not more, genuinely more. But from here, the potential to drop is anything from, at a minimum, 20% to a maximum potential of about 45%. That's just not enough. That's too much of a drop for me to want to risk getting in here without having the confidence that it goes higher, right? I'll be confident once we're above 100. I'm not so confident here, right? Confidence is key, right? With girls, with guys, with crypto, with businesses, it's confidence is key, guys. $64. And in crypto, it can't be blind confidence, man. It can't be false. It has to be real. That false blind confidence might work on the ladies or on the dudes if you're a lady. It might work even in certain job applications. It does not work in crypto. It has to be true confidence. And right now, I do not have true confidence that Dash will move higher. I'm pretty confident it moves down. I don't even have true confidence that it moves down. But when we're in that phase, you're not truly confident it moves up or down. What do? You don't do anything. You might feel as an investor, as a trader, you need to always do something with your money, but that's a farce. That gets you in trouble. It's beneficial to have money on the sidelines waiting. It's okay to not do anything, right? The best traders aren't trading 24/7. They're trading 10 times a year or less. You know what I mean? And maybe not the best. The best ones probably do trade every day, but a lot of successful investors, Warren Buffett, they're not making plays every single day or every single week even. You know what I mean? They're aware of things in the markets, but they're waiting and seeing. And that's what we're doing here. And I'm waiting because I think we're going to the downside. I'm totally open to buying Dash. I would buy Dash, but not until it at least hits $51. That's the time to start DCAing. Until then, kind of looks like we're in this hockey stick of death, right? Back here, we thought it was this. And then after we broke out and did this, we're like, you know what? Maybe we're in a greater kind of flag. Maybe it's like this. Because bear flags, bull flags alike, they typically set you up with like the false flag. You get the breakout, and then really what it is like this is your true flag range, is the bigger range here. I don't know. Maybe it's a bear flag, maybe it's not, but it's starting to look less like one, in my opinion, right? This flag is too big compared to that flagpole. But at any rate, it's still some type of bullish consolidation in the bearish structure. Makes me think that we're going to go down. Okay. Let's actually look at you on Coinbase with some volume. Let's see here. So you are building volume, actually, which is nice. You're building volume out of this. You're just not really going anywhere so far. You're finding resistance here. I'm not impressed. You could go higher. And again, maybe we go to 73. Maybe we go up to 83. I'm still, even with that, that might be impressive from here, but it's not enough to convince me that we're moving higher. The RSI is bullish. It looks good. The stochastics look bullish, and the MACD looks bullish. It's hard to be bearish here. There's nothing, in my opinion, suggesting that we go lower. However, from here at $64.70, if we do move higher and we don't have volume coming in to push us higher, we have, in other words, we have a higher high and we have lower levels of volume and we have bearish divergence on the RSI, that might explain that we are at a top, right? Maybe not exactly here, but perhaps around $66 to maybe even like $70. That might be the high. So by the time you guys watch this, we're probably above $65. By the time you go to bed, we're probably back below. That's my guess. 4-hour time frame here. The MACD is right at an area where you might expect resistance, but you can push a little bit higher. Stochastics are right at an area you might expect to find resistance, and so is the RSI, just to be fair. Daily time frame, but actually but beyond the fact that you're at points of resistance, I guess you're more bearishly inclined on the RSI. Stochastics are more bearishly inclined, and so is the MACD. So yeah, they're all. I'm sticking with the downside. Again, are we breaking through? Are we finding support at prior resistance, or are we just finding resistance at prior support? You know, that seems to be the outcome, in my opinion. This is not a lot of volume, right? Here we had a good bit of volume coming in. Look at that, and it pushed us higher. That wasn't enough to see higher highs. Why is this? This is off to a weaker start so far, and we're already at the points of which we found resistance before. You know what I mean? It's like a weaker reaction than what we had back here. That's not more bullish. If you're bullish here, that just tells me you're more desperate, right? And if you're watching this and you hear that, if that's you, you're more desperate, and that's okay. It happens, but identify that in yourself so you can make better, less emotional decisions in the future. Again, the writing's on the wall. We're at the same levels here that we were when we rejected. But look at the reaction here on the first rejection. Look at the reaction here on the second rejection. Look at the reaction here. It's pathetic. It's weaker. Weaker does not get me more excited. It gets me less excited. You know what I mean? That's. I don't think I'm connecting dots that don't deserve to be connected here. Daily time frame. Lower lows in the RSI. Lower lows in the price. Stochastics are oversold. MACD looks like it's crossing through the zero. All bearishly implied things. And we don't have to go lower. At any point, we could find support. I'm just telling you, as somebody who uses the Fibonacci retracement tool as their bread and butter in their analysis, I've been using it now for 10 years, so I've really got some refined experience. The statistical probability of us going above this high or even getting above $90, the statistical probability of either of those outcomes happening before we interact with at least the 0.5, it's just not there. It's not that it can't happen, it's just probably not. And most likely, the outcome would be that we go to $39 to $34, technically speaking. But again, I'm very open-minded to Dash finding support at $51 or finding support at $45. To me, it just makes the most sense that we go down somewhere around that $40 to $45 range, personally. $40 to $35 range, even. I got nothing else, though. I think I've said everything I need to say. Ultimately, I do believe Dash is on the path to recovery. I do believe that you're going to see some higher prices, and I think anybody who bought Dash, even at the high, will feel smart in time, just maybe not right now. Look at that, $38 right there at the 236. There's just a lot of support down here, okay? That's all I'm saying. Might go down to the areas where there's a lot of support. Makes sense. The next move should take us anywhere from about 235 to 330. If not there, then higher. Again, let me say that. We're at $64.53. We expect the price to go lower, but even if you buy here, you can count on a 260% to 400% move with time, probably by the end of this year. 235 to 328 probably by the end of this year, if not higher. If I'm wrong, my guess would be it's only higher. Whenever you interact with the golden ratio, when we hit the golden ratio the first time, the resistance is strong. But when we come up to it a second time, you typically break through, and this is the zone that you top off at. It's the 786, 886. So we likely do go there. Typically with the golden ratio, what you'll do is you'll pull back, you'll find support in the 382.5 area, and then you'll move higher. But we didn't. So now we're probably going to go to the next fib level, which is all the way down here, which again, from the low here to the high here, is right there at our golden ratio. It's right there. It's perfect. It makes the most sense to me. I got nothing else. Thank you all for being here. Hit the like button, subscribe, take care of yourselves. Isn't it just written perfectly? You go, as soon as you go below these lows, as soon as, oh no, we have lower lows, boom, as soon as you do it, that's actually a perfect area to find support. You're actually right here. Like, let me put a line right here and then delete everything else, right? Right there, there's the golden ratio, that white line right there, okay? You're also right where you found resistance, and support before in your life. It's a perfect area to go to. You make people max capitulate because we just got below these lows, and then boom, when they're least excited, that's when they're supposed to be most excited, because then at the end of it, we have this A, B, C correction all the way down here, and then boom, then we rally. That's what I'm forecasting. And at this rate, we should be down here probably by the end of the month or early December, and then middle of December, end of December, going into the end of the year. We might not recover that fast, but we should be on the road to recovery. Thank you all for being here. Hit the like button, subscribe, take care of yourselves. I'll see you on the next one.